Hello, it is the 8th of August, the 8th of the 8th, Lionsgate Portal Day, and I'm going to start today looking at FX, and then we'll look at stock indexes and commodities, because although we've had a very quiet start to the week, thinking there wouldn't be much news on the calendar, there has in fact been some, quite interesting news that's really squashed risk appetite. First off, we had a combination of falling Chinese exports and imports, and Moody's downgraded 10 US small and medium sized banks, and that's all working to kind of stamp on risk appetite. So the correction that we were looking at in stock indexes is continuing. But the real story is the continuing strength in the dollar and particularly longer dated bonds. So the dollar is bid, it's rising against all of the G10 currencies, although I would say perhaps the strongest or the is still the pound and the euro. The kind of the dollar block and Scandies have been hit hardest, 0.5%, 1%, whereas the euro and the Swiss franc are only kind of 0.25% lower so far. But for me, it looks like trend continuation and a bigger move setting up. We've also seen a big reversal in oil that we were looking at. That's followed through, and so that's hurting some of the petrodollars and commodity currencies as well. So let's start off by looking at this move in the dollar and this move in bonds. So this is the huge on the monthly. This was the big reversal level, 4.04 in these this bond yield, 10-year bond yield, and we said this was major resistance. Haven't been able to close above it, and you can see this monthly candle is turning into a proper reversal candle, and here we are. So I think this is also pointing to a big move higher in bonds, and that's very supportive of the US dollar, and that's exactly what we were seeing. So when we were looking at this move higher in the dollar, let's look at it on the daily. We are retesting these highs, but what I like is if we close above this daily 50 and we break these highs, we're going to continue to the top of this descending channel, or at least back to the daily 200 moving average. Now, because the euro dollar is 57% of the dollar index, I think that this is also more likely to break down. At the moment, as we head into the US Open, we are in the euro dollar right on support, and pretty much for the day, we've kind of done an average daily move. That doesn't mean we couldn't squeak a little bit lower and close underneath this daily 50 moving average. It's at 1.094. But for now, I think that potentially today's move lower may be done. And so as we head into the US Open, we are quite likely, I think, here to see a counter trend bounce. And then we'll see if that gives us another sell setup to continue lower. At the moment, we kind of really haven't broken down. And so I think if we bounce from here, we can draw a line under this and say, well, that when that breaks, yeah, we're definitely going, because that will be us under the daily 50. And it's really, but really it's that horizontal level, that 1.0945 that we need to break concisively if we're going to continue lower in the euro dollar. Yesterday when we looked at the Aussie dollar, we said, as long as we don't close above this orange line and these previous lows, we're likely to see a reversal. And look at this horrible reversal today. Not yet new lows, but with this double top and this break of the thing in the middle, if we use just regular traditional technical analysis, we should go twice this distance. That should be our target. And twice this distance would put us down to 0.63 in the Aussie dollar. And the Aussie dollar's favourite fib retrace is an 886. And if I mark that in, you can see it kind of lines up. So between 0.628 and 0.63. Now, I'm not ruling out a bounce at 0.64, but I think that this should now continue lower. So wait for a bounce, because we've had quite a move already in European trading, and this is a market that we should be looking to sell on rallies. So for me, honestly, keep whatever time frame you're trading, keep it really simple. I like to see some green, a high Kanashi, and then it roll over in the direction of trend for an entry. And the best looking entries have 3 waves. So, you know, like 1, 2, 3, and then you get a better swing. So all of these markets look like they're headed lower. The one, Kiwi's dollar's done exactly what we said as well. Not yet at the bottom of the range though, but the most interesting one was the Canadian dollar, which is now open again. When we looked at this last week, we said we had a really big deal resistance level here at 1.33, and above it we're likely to head back to the top of this rising wedge. It looks like at the moment we're trading above the weekly 50 moving average, which is also the daily 200 moving average. A close above this today would be really strong and point to more upside on pullbacks. So I'm pretty excited about this. Now, it's a little too far gone. There are no entries for US trading here. But again, pullbacks in this Canadian dollar, unless it collapses in US trading today, is all set to continue higher. If you are looking at continentals, my favorite that kind of hasn't completely gone yet is the dollar Swiss. And the reason I like the dollar Swiss is I don't like buying Swissy, but I usually like buying the dollar against the Swiss because you've got the Swiss National Bank, who are famous currency manipulators, trading on your side. And it's always nice to have someone bigger than you trading on your side. Now, when you have a big down candle like this with not much tail at either end, it's called a Marubosu, and the midpoint of this candle is very often a really good trading level. If we draw and look in where, and that's between the open close, and so that's usually the 50%. So here in this dollar Swiss on the weekly, that Marubosu level is 0.875, and usually if you close above it you end up with a much bigger move, and in this case it would be back to the weekly 20 moving average, back towards these highs and back to 0.89. We're at 0.87 at the moment on the weekly, so I'm looking for a close above this 0.875 and a hold above it on the weekly, and then I think we're going to see a pretty nice weekly swing, and this should see some follow through for the dollar. And if you wanted to trade one of the continental currencies, by far my favorite, if we look at the daily and how we're holding this daily 20 moving average, I think this dollar Swiss is definitely set for more upside. As you know, I like to have targets from fib retrace levels, and my favorite is the 236 fib, and that also points to 0.89 next on this. So the weekly 20 moving average and 0.89 is the first upside target by pullbacks in the dollar Swiss. So dollar strength not usually good for commodities. Yesterday in oil we talked about this really big deal level at 82.59 and why we could see, you know, a bit of a nasty shakeout and a wave 4 here, or a bigger pullback. That's so far what we're seeing. Now, clearly these previous swing lows, and so that's about 78.50, are kind of key support. And if we look at it on the daily again, that's where our daily 20 moving average is. But I also, as you know, like to lean on a 236 fib, and I'm going to go from this swing 79.303. Potentially the market is looking at this bigger swing, which would be 78.25 as well. So I'm going to go with 78.25 in this previous swing low and the support here. So again, this has gone quite a long way, but if we get a nice bounce back that meets resistance, another swing lower in oil, I think, to 78.25. Now, potentially this was just a 3-wave correction, and so potentially we could see a bigger 3-wave here like this. So we could see this. However, if we get a shallow correction and then a move lower, I think, and especially if we hold underneath this hourly 200 moving average and the kind of, then I think that we could be setting up a much bigger move and rejection at this level in crude oil. So yeah, that's what I'm looking for, and let's see how we handle that and how the market bounces today. Feels like we could see some volatility this week. After a long period without any, when the market has endlessly ground higher, very often you kind of get people positioned wrong footed, and those are the kind of conditions that could lead to more volatility and a bigger move lower. One thing that makes me think maybe that doesn't happen is the pullback last week was pretty orderly, and I don't know how much of that was to do with month end. So, you know, it certainly wasn't the kind of huge move the bears were hoping for. But I wouldn't be surprised, given what's going on, and especially the ratings of the banks, whether we couldn't see a bit more selling. Now, one of the things that's driving these dollar higher is the move in treasuries. Potentially, we're at a bit of a resistance level here in short term anyway. Today's move may be done in this 10-year. And the reason is we're at this previous swing high, we're at the daily 20 moving average, and that often the first time back to it is a bit of resistance. The daily 20 moving average is very often, just one of those levels. Now, could be just a shallow move back and we keep going. A close above that daily 20 moving average will see us, as I said before at the beginning of the week, back to the top of the channel, back to this daily 50. But for today, this move may be done. So this again is reinforcing, watch out for sometimes I feel sorry for US traders, cash traders. Sometimes, they get up and the market's gone too far to sell. And so you kind of really can't do anything except buy the bounce, even if you are, and the trend is the other direction. Okay. I will take a look at, sorry about my dog, let's take a look at gold. Now, we were looking at this important support level in gold. This is spot gold. Potentially, if we were going to do kind of a head and shoulders, this was the region where we would be looking for it. At the moment, though, we're underneath it, and it looks like a bigger move lower. Not sure how today is going to end up. Again, this has fallen quite a long way with everything else. And certainly there's no buy signal here yet. And there's certainly not, for me, a level or a reason to buy it yet. If I were to put fib retrace levels just on this swing, then we've already bounced from this 61.8 fib level. And if we close underneath it, then we are likely to continue to this 786 next. And if we go down to the 4 hour and look at these fib retrace levels in gold, this 50% was pretty good. 236 initially worked very well, so I'm going to lean on it. So I'm going to say if we can hold under sort of 1929, that we are going to continue lower to 1913 in gold. And if we were to trade back above 1932, this is a 4 hour chart, remember, then potentially we're in a sideways range and we can look at the, top of this sideways range and perhaps 1946. So, and, that will be helped by if the dollar pauses after this really big move. But if it keeps going, this gold is likely to keep going also. Same with silver. Still falling. When we looked at this at the start of the week, we said if we couldn't get above these moving averages, we have further to fall to 22.36. It's fallen pretty sharply ahead of the US Open. Again, if you're not already in, you kind of need a bounce before you sell some more, but that's where I think that we are headed to. So if you're looking for a bounce trade level, there isn't really one until we get down to 22.36 today. Okay, let's take a look at stock indexes, and I'm going to start with the dollar, because this correction, with the S&P, this correction is continuing. Yesterday our trade was, we were looking for a bounce, 3 waves back to this orange support and resistance line that was around 45.35. We reversed at it, made a new low. Now, potentially, we could say, well, is there 5 waves here? There might be, in which case we could come back up again and retest this 45.35. However, I kind of lean more to the fact that this bounce, if we just roll over here after the US Open, we're still looking for this to continue lower. If we close underneath this hourly 200 moving average, we are headed for 44.18. And so it's just a matter of finding the right entry. If I look at this on the 4-hour and the daily, it's a bit messy, but we're not quite at those kind of levels we need to be, I think, say correction over. So a little bit of a wobble in the middle, still looking for lower before we get a really good buy level. And as long as we stay underneath 45.35, I'm going to keep that bearish view and be selling rallies. If we take a peek at the NASDAQ, which is less, you know, there's some, you can see this is starting in the NASDAQ to look a bit more like a bear flag. If we look at this on the 4-hour, so here we're on a downtrend where it's closing sideways. Clearly we've got some pretty key support here, and if we're going to do a typical sideways range, we could see another bounce back to the top of this sideways range, same as the SEP. But if this support level here breaks at 15.364, as we said, this sets up a kind of bigger reversal pattern, because I've drawn my fibs from this high to this low. When you reverse at an 886 and you close and hold underneath the 786 on a back test, you usually come back to the 50% here in the middle, which would mean a bigger summer correction in the NASDAQ back down to around 13,655. Again, it feels like everything's been really quiet. This grind up was lower and lower and lower and lower volatility, and so it is possible with this pullback that we get a little bit of a expansion in volatility, and it could all get a little bit leery, so watch out for that. Okay, let's take a look at the FTSE and the DAX. So the DAX, remember we said in the DAX, key support here in the middle, this pink support zone at 15,787. And we could have seen, you know, first swing, a bigger move, and then continuing lower. If we close underneath it, just like here, I think that we are headed back to the bottom of this range, or this expanding range. And so 15,787 short term is key resistance on a bounce as we head into the US Open. And if we don't close back above it, I think we could see a 5th wave lower. So pretty bearish reversal. Now false breakdowns can be quite bullish for bigger bounces. So if we close back above this, we could see more upside back to the top of this range. Remember, it's summer, we very often do get sideways ranges. So I think after this move, it's going to be really interesting to see how far and how well this can bounce, and if we continue lower or not. Let's take a look at the TSX and the ASX now that they are back open again after the holiday. Now in the Toronto Stock Exchange, I think that on the daily, let's look at this horrible sideways range that we've been in forever. We are stuck between these moving averages. So we bounced from this pullback to the daily 200 pretty nicely. But again, because this was an 886 reversal that closed underneath the 786, our target is this 15%, 50% and 20,000 again, this 20,000 pivot level that's been so important to the TSX. And so I'm still looking for another swing lower to test this 20,000 level, and I think we could be setting this up if we take a look at this TSX. So still looking for lower, one more swing lower. I'm not ruling out one more squeeze higher, but I'm still, even if we do that, I'm still a seller back down to this 20,000 level in the TSX. So if I would say, you know, maybe if we can make a swing low here, draw a trend line underneath, that would be one way, or back underneath this, you know, hourly 200 moving average that we're going sideways through, or underneath 20,198 would set up that next swing lower. If we hold underneath it, would set up that next swing lower. Okay, let's take a look at the ASX and where we are, because this was again one of those. In terms of the daily, what we closed underneath the daily 20 moving average. So when I drew this, you know, there's a couple of reasons why I think we're setting up at least another swing lower in this ASX. First off, we had this really nasty bearish reversal day last Wednesday the 2nd, and we couldn't close back more than 50% of this open close of this candle. That keeps our view bearish. We also got underneath this 20 moving average, and now we've reversed it. And these little 3 inside bars, the open close, you see you have big down candle and then 3 little inside bars that don't close more than 50% up. That's a really bearish reversal pattern, bearish continuation pattern for the ASX. So still looking for another swing lower in this one as well, unfortunately. And if I take this whole swing, so if we think this is just a big ABC correction, you can see we got underneath the 236 fib and are holding underneath it here. And that means that 72.40 next, and then more likely, I think, 71.62. So clearly a big move lower already. So it needs a bounce to sell, but I would be a seller of bounces in this until we get down to 72.40, maybe 71.62 next in the ASX. So yeah, correction unfortunately continuing in these stock indexes. Okay, I'm going to do a separate crypto video, but I will take a quick peek. Let's take a look at where we are with Bitcoin futures as we head into the open. And one of the things that's really positive about this is Bitcoin, you know, one of the things Bitcoin, if Bitcoin is going to take over as a hedge from gold, which is a pretty rubbish hedge, one of the things Bitcoin needs to do is outperform when everything else is not having a good day. And this is exactly what it's doing. Now, see how this daily 20 moving average has capped us basically since the 26th of July. So almost 2 weeks we've been, you know, we've been 10 days anyway within this sideways trading, unable to close back above the 20, unable to close below the 50. For me, closing above this daily 20 moving average today says that we are going to see more upside. It might just be a bearish bounce, a bearish equal measured move. So if this was our lowest low and this is our swing high, the equal measured move level is just slightly higher than the top of this range at 30,340. So I'm going to say that 29,720 is kind of ideal trend support here, and we should continue higher from here to 30,340. So we need to be looking at shallow intraday pullbacks, and we're going to be bearish if we close back underneath this daily 20 moving average. So for now, looking pretty good. And one of the things you can say, and I need to remind you, is bear market rallies can be fierce. They can be really quite fast moving and make you think that everything's all good again. And the reason is it's not you. And you might go, God, who's buying? Everyone. It's very often the stops of the shorts as well that drive it higher. So 30,340 on the upside. We'll see if we can, you know, close and go beyond that. Then yeah, I think because we are in this lovely, you know, corrective sideways range, we're going to look back to the top of the range, but potentially we could have made quite a decent tradable bottom. Now, if I got to the 4 hour, or if we go up, for example, to the daily, you know, in terms of daily moving averages, this does look really good for a pullback. It's taken so long. And volatility to the upside in Bitcoin would be really nice. As I said yesterday when we looked at Bitcoin, ETH Bitcoin, ETH is really underperforming Bitcoin. Look at this horrible chart here, hourly, 4 hourly. And that usually means that altcoins are underperforming as well. So this move so far is just all about Bitcoin, and that is the one to watch. So if we close and we can hold above 29,550, I think more upside to come, 30,300, and above 30,300, yeah, we could go back and test the top of this sideways range, maybe 31,000 again. Okay, good luck. Buy pullbacks. Don't be the one that buys the spike or the end of the spike.